you will always have people who see $1 million listing and want to take the exam and live that type of dream as a real estate agent. As you know, very few do. The majority is working really hard all year to try to have 4 transactions. I mean, that's the reality
that's
of
the
it.
math.
Yeah, that's the reality of it. So same way with loan originators, okay? Imagine that you started as a loan originator in the third quarter of 2020 when everybody and their brother and mother wanted to buy a house and rates, went sub 3. Come on, I can be a loan officer.
Yeah.
This is easy.
Right.
But, there's always ebb and flow in life. So
yeah.
Here we are.
Hey everyone, and welcome back to the Hustle on Purpose podcast. Today we've got a very special guest, Robby Cole. Robby, how are you doing today?
I'm awesome. Humbled and happy to be here.
Man, so excited to have you. Get to learn more about you and what you do. If you would, just give us an introduction, who you are, just any background you're willing to share about yourself.
Sure. Like you said, Robby Cole. I am a loan officer with Benchmark Home Loans, and I think I'm coming up on this is my 17th year, so almost 18 years in the business. So I got in back in the subprime days when things were a little kooky and survived the, 08 bubble. And, here I am. I help people finance the American dream. I work with a really good company, a really good culture, and I've got a really good team that makes us look really good. And they do all the heavy lifting. So I've got a degree in economics from the University of Georgia. I have been a Razorback season ticket holder.
I was about to say, are you a Bulldog or a Razorback?
Yeah, it's been easy to be the past 2 years, right?
Yeah, they're pretty good.
Yeah. So I got a degree in economics. I was a financial planner. I was in the financial services industry for a few years in Atlanta. And my father moved out here to Arkansas in the 90s and married the #1 real estate agent in the state. And then a few more years later, my brother also moved from Georgia, moved to Arkansas, and then moved the the week before 2000, so 1999. Met my wife on Greer's Ferry Lake and chased her for about 2 years before she caved and settled on me. And, over 21 years and 4 kids later, here we are. So,
wow.
Yeah.
There's so much there. So, Greer's Ferry Lake, beautiful place. Y'all still go there frequently? Or?
We have friends that allow us to come up once or twice a year. So
that's the
we're
best
very,
way.
Yeah, we're very happy.
Yeah, the best boat is your buddy's boat.
And this is true. Yes,
yeah,
that's it.
For sure.
Yeah.
And talking about work, so when I hear 18 years in the lending business, props to you. It's really impressive. Because I know, especially in recent years, I think anything in this real estate ecosystem has just been people trying to flood into it and see it as just an easy way to make a lot of money. And I think a lot of people have found out through that it's not, and are really finding out now that it's really not. So when I hear getting in pre-07, 08, making it through that and finding a way to continue to stay in it. I think it's easy to just kind of let that go by, as somebody says, 18 years in the business. But as I've been on my own journey, I'm immediately flooded with, I can't imagine the sacrifice, the attention to that it's taken. It's just, the older I get and the more experience I have, the more I'm just man, that's really impressive. So just want to make sure I don't gloss over that. And I give you props for that.
I appreciate that.
I think it says a lot about, even though I literally just met you. I just, once again, the older I get, I don't think anybody makes it that long in a business like that without doing it the right way, without taking care of people and without, doing a really good job. So, I think growing up, it's easy to fall under that assumption of things are easy, or you can get through doing something halfway.
Right.
And it's like, man, the older I get, it's just like, it just doesn't happen.
Yeah.
So props to you for that.
Well, thank you. I've had good leaders and good mentors and good coaches, and obviously great parents. And I'm a product of my upbringing and my experiences. So,
Yeah.
And then I've got a great team now that again makes me look a lot better than I probably really am, and not probably, but definitely am. They make me look a lot better than I am, and
Yeah.
So it's I give credit to those around me that provide really good service to clients.
We'll make sure they watch this too. So
What's that?
we'll make sure your back office team watches this too, so they know you gave them their credit.
Yeah, good.
What's been, how have the last handful of years been? Obviously, real estate's been crazy. It's been a hot topic. People want to talk to me about it all the time. It's part of the reason we started this podcast is like I get to have really cool conversations with people like yourself that know way more about loan origination than I ever will. And it helps me give answers to the questions people have, right? And it helps me get better.
Right.
So from your perspective, what have the last, let's say 3 years kind of been like?
You mean since COVID?
Right. Yeah. COVID. Yeah.
as
basically.
as a benchmark for the next 100 years. Obviously, you were drinking from a fire hose if you're in real estate at any level, really. And it was fun. It was exciting. It was overwhelming. And I also had I guess you knew that wouldn't last. Okay.
Like it couldn't.
Yeah.
Right?
Yeah. Where I literally had this conversation numerous times that, if I offered somebody a 2.625 interest rate on a 30-year mortgage, they may go, well, this bank over here has it at 2.5. I'm like, okay, it's an $18 a month difference on your payment, but if you got to go for 2.5, then go to a 2.5.
Yeah.
So that was a real conversation.
That's wild. Yeah.
Interesting. I don't talk about rates a lot, but I do remember saying years ago, there in the Asian markets, you heard like this negative inflation and also negative interest.
They'll
going below zero.
They'll pay you to borrow money.
Yeah. So, and then people would ask me that question. If that's you get being a mortgage originator, people are always, how do you feel rates are going? Where are the rates going to be in 6 months, 12 months, 24 months? So everybody always wants to know who's going to win the next Super Bowl, right? We don't have that answer. We don't have a crystal ball. But I do remember people. I remember telling people rates will never go below 3. I remember saying that. Oh, they'll never go below 3. Never go below 3. Well, guess what? They went below 3.
Yeah.
Yeah. So
when everybody's trying to find the bottom, everybody's trying to find the top.
Yeah.
And it's like,
it's
been
so
a carousel.
So it was interesting. It was great. The whole time your volume has gone to a level, that's more than it's ever been in your career. There's a realist in you that goes, it's not going to last that way. And so obviously, with the government doing what they were doing and, the Fed doing what they were doing and, they've pumped the brakes a good bit, but the word I use,
everybody's brakes.
Yeah. But I've been using the word not to have a negative connotation because that's the way I'm wired is, we've kind of normalized. And it's hard for people to figure that out because we were not normal for 36 months, better part of 2+ years.
An argument could be made that we hadn't been normal for a decade plus.
Yeah. So people have to be cognitive of the fact that, yes, here's where rates are now. They're under 7. Prime is at 8.25 right now. We're July 2023. But what people did forget just in a generation ago and less than a generation ago, the average 30-year fixed rate mortgage for 40 years was under 8% or between 8 and 9%. People forgot that.
Right.
And then when they, just continued to come down 5s, 4s, 3s, 2s, I even did a VA loan under 2.
Wow.
That was, and I told him, I said, hey, you may be the one. And he was the one. But people forgot or kind of lost reality of where interest rates had been, should have been, could have been. And here we are. So
this episode of Hustle on Purpose is brought to you by Arkansas Real Estate Buyers. If you have a problematic piece of real estate, we would love to help you. Go to the description, click on the link, schedule a free consultation with me personally, and we'll get you set up. Now let's get back to the show.
You started that off with saying it was like drinking from a fire hose, and absolutely. And it was almost worse than that. It's like when COVID happened, it was almost like trying to drink from a water hose that someone was spontaneously turning on and off at like full blast with nothing in between. It was either all the way on and then it would be off, and like there would be some fear, and then it would be back on. And it was just kind of crazy. And I think that drinking from the water hose, right, is like, even if you're a business and all of a sudden business is going bananas. All of a sudden you're writing more loans than you've ever done. And you have to build the infrastructure to support that. You've got to hire more people. There's more paperwork. There's more clients. All of this stuff, all these touch points have to be covered, right? And I think a really sad part about it now is so many people had to be hired to support all of this business. And I've seen it firsthand, just even here locally. Now, so many people don't have those jobs because business has slowed down, and it's so many of those employees are last man on the boat, first man back off the boat, right? And we were talking a little bit earlier about these decreasing numbers in these mortgage originators, and you made that great point of like, so many of those people, it's because they got hired because the U.S. banks of the world had to hire so many employees to keep up with the demand.
Right.
And then the demand almost overnight just disappears. And it's just kind of a tough place, and I don't know what to do about it or what my point even necessarily was. It's just, I just feel bad for those people that you get into a career, you start learning about, mortgage origination is just one of the many careers that have been affected this way. And all of a sudden the rug's just kind of yanked out from under you. The tech sector has been hit kind of the same way. And now where do those people go for jobs? I don't know.
Right. That's another point to, me always trying to be humble, to know that I'm still in the game, so to speak. Luckily, thank you, Jesus. But every economy has had highs and lows, peaks and valleys, and there have always been winners, and there have always been losers, and it will always be that way. And one thing that I think permeates both the winning and the losing is knowledge and education, meaning whether you win or lose, you're going to learn something.
Yeah.
And that's the takeaway when things like that happen. We would like to not feel like if I had a family member that, went on with a big box retailer and, started doing, lots of loans through a refi boom, well, they may be expendable at the end of that refi boom, but so you've got to learn to obviously plan for the rainy days, and that's.
Alex Hormozy, I've said this quote before, but I just love it, and it's pertinent to what you're saying. He said this, and it resonated with me. It's like, the goal isn't to get into business, it's to stay in business. Just like the goal isn't to get married, it's to stay married. The goal isn't to get in shape, it's to stay in shape. But obviously that can't happen all the time, but you can. It's better to have been in the game than to have never gotten into it, right? And you can take those lessons away, and there's a lot of value in that.
One of my friends and top producers with our company is in the Kentucky market, and I heard this from him first that kind of made me sit straight up a little bit. And if it wasn't his quote, it was obviously one of his coaches, Todd Duncan or somebody. But we were in a room, as a company, and he goes, "Okay, who's the best loan originator? How do you quantify the best loan officer?" And of course, somebody raised their hands, the guy who does the most, or the lady who has the most volume. He goes, "Nope." He said, "It's the loan originator and loan officer that has the most revenue left over after all the bills are paid." You could be making billions, but if you're spending trillions, like somebody we know, you're upside down. So the best loan officer, best loan originator, best real estate agent, best, banker, best, whatever, auto detailer,
Right.
It's the one who still has something left over at the end of the day, end of the week, end of the month.
Yeah. That's so true. It just made me think of it, and people will hate this, but it's just funny. There's like a meme, and it was like, women are responsible for making X amount of number of like millionaire men. And it was like, the key is they all started as billionaires.
Yeah. Well, do you, you're probably not old enough to remember this, but Saturday Night Live, Steve Martin, he's the comedian.
I know Steve Martin.
So he used to have Steve Martin's foolproof way to become a millionaire. Have you heard that before?
No, I haven't.
First, get $1 million. Second, never pay taxes. And number 3, learn the 2 simple words, "I forgot." Mr. Martin, were you aware that it was illegal not to pay taxes on $1 million?
Forgot.
I forgot. I'm sorry, can't relate.
That is, foolproof way.
Yeah.
Foolproof. Yeah.
Yeah.
That's funny. So when somebody comes to you now, because I've been talking to a lot of people, and I call it the golden handcuff situation. That's not my term. Like people get golden handcuffed into like a job or whatever, but it's like now it just seems like so many people out there, it's not a bad place to be, but they're just kind of golden handcuffed to their house, right? They may want to move, but nobody wants to give up their 3% mortgage to go get a new 8.5%, 9% mortgage.
I've bumped into that a little bit. Not as much as you would think, because you've got to also into that. I like numbers. Into that, the majority of America moved or bought a house last year, or the 2 years, or the year before that. Yeah. So they're not in a bad situation.
Right.
Okay. Obviously, yes. All things being equal, ceteris paribus, if they're going to house up, they're financing less based on where rates are today versus where they were, 24 and 36 months ago. So I've run into that a little bit, but not quite as much as you think. One of the things that I've said in my business for years, even though I've got a degree in economics and I was a financial planner for years, I'm not a big interest rate guy. And people sometimes go, "Well, you're a loan originator." That makes me, tilt my head and scratch a little bit. Even when interest rates were 19 and 21%, when my stepmom was selling, high-end homes here in Little Rock, people were still financing $1 million homes. People still wanted to buy a new house. People still getting married and wanted to give their wife the best. So even when interest rates have been 18, 19, 20, 21%, people still bought houses. When they were 10, 15, 16, 17, like our parents and grandparents' generation, people were still buying houses. You finance and afford the payment. You don't afford the rate. Obviously, it's a variable, but people are still buying houses. People are still selling houses, and that will not go away.
Yeah.
I remain positively optimistic. The numbers have changed a little bit, but people are still going to want to buy a house.
Well, life is short, right? Like you only get one go at it.
The brevity of life,
is an interest rate going to keep you from raising your kids in the house you want to? Like, hopefully not. What I tell people, because I get asked about it all the time as well, even though I'm not a loan originator, is it's just another variable in the equation. It's not any more or less important than the purchase price or your renovation costs or whatever.
Right.
It's just another variable.
Right.
Should it be taken into account? Like, sure.
Yeah.
But there are still a ton of time. Like, another thing that goes along with this that I always tell people is part of it's always hard when it comes to buying or selling a home. When financing's easy, finding the deal's really tough because everybody's got that easy financing. And vice versa. Like when one part of it's easy, other parts get hard.
Right.
Financing was easy, made the market crazy hot, really hard to find a house.
Yeah.
Well, now people are sitting there and they're like, well, I've been sitting on the sidelines, putting in offers, unable to buy a house. Now rates are high and now I'm scared to. And it's like, well, yeah, but now you can get the house you want.
There you go.
And you can, your realtor can write up that offer in a way where like, maybe you get closing costs paid for by the seller. Maybe you get that house for $50,000 less than you would have 12 months ago. And it's like I think people just lack some of that knowledge on how offers can be structured, how that interest rate is just another variable, and how deals can be worked in a way where it still makes sense at 9%.
Yeah. You're exactly right. I totally agree. And I think I re-explained that to somebody this week was during COVID and, historically low interest rates, you had first-time home buyers, like you'd indicated, that are eager, want to buy, but just couldn't go 30% above list.
Right.
They just didn't have the capacity to do that. They don't have the bandwidth to do that. And they're matriculating back into the market.
On the appraisal issues, I mean, there was so many issues with trying to get those people. Yeah, I mean, I'm preaching to the choir, obviously, but like.
Yeah. I had one, this is the one that I'll always remember. My wife and I happened to be we were at the pool, and I get a call or a text from my team, and they're going, the appraiser's thinking this might be a little short, I'm like, how much? They said 140,000. And I said, wait a minute. I said, isn't this price only like 500,000 something? And they're like, yeah. I'm like, ew. So
a little short.
Yeah. So being fortunate enough to be in the business a while, I knew both the listing agent and the buyer's agent in this market. So I happened to pick up the phone and go, hey, I'm just giving you information. I'm just the messenger that there might be an issue. Made him mad. I mean, he was livid. I'm like, I was not calling to try to make you mad. I was trying to let you know we may need to massage things a little bit. So to make a long story longer, the appraisal comes in. Guess what? It wasn't $140,000 short. It was only $90,000. You know what happened? They met in the middle. Seller came off 90. Buyer brought in another 45 grand.
Okay.
So it all worked out. So I use that as a real world example of how crazy things were. Yeah. But I also tell my clients a lot, most of the things in the process of buying a home that we bump into, whether it be appraisal, inspections, easements, neighbors, I mean,
everything.
Everything. Yeah. They're most of the time hurdles. They're not roadblocks.
Right.
Meaning almost always there's a solution to that, getting around that hurdle, get over that hurdle.
And if you're an agent or a loan officer that's not preparing people for that ahead of time, I think you're dropping the ball. Because I've been a part of not nearly as many transactions as you, but buying and selling hundreds of houses, and the amount of ones that go off without any kind of a hitch are limited. Yeah, I mean, there's always something.
Yeah.
The title work always needs something.
Yeah.
I mean, like you listed a bunch of them, and it's just always something. And I think people need their hand held quite a bit through that, and preparing people for the fact that you may have a good way of explaining it. I haven't found a great way to concisely prepare people for that, other than, hey, there's likely going to be something that's going to seem like it's a deal ending something. It's usually not.
It's real estate agent / psychologist hat, and for whether it's your first or your 101st, buying a home most of the time is still, there's emotions involved.
Yeah.
And so as a real estate agent, I've always indicated, even though I did go to school and get a license for education and knowledge, I could never be a real estate agent because, number one, your clients make your schedule, okay, period, anytime, weekends, holidays, whatever. And the idea is it's emotional. They're intangibles. And they have, reservations, their emotions. Do we have cold feet? Because we've never done this before. So all the myriad of things that a real estate agent has to go for. That's why I always tell all real estate agents, thank you. Thank you for what you do.
Yes, for real.
Thank you. But, you don't want to go, hey, you could have, the subject property has an enclosed garage and it happens to be over utility easement and the appraiser happened to catch that and he's going, hey, the utility company's not, the title company's not going to cover that and you can't buy it. Okay. I just had that recently happen with a first-time home buyer. First-time home buyer, they learned a lot more on that transaction than they'd anticipated. But I don't know that a real estate agent in establishing a rapport, guiding to the right property, getting them under contract can cover all of those, the what ifs.
Yeah.
It's, why would you want to? So you're exactly right. I'm sure somebody out there's got a really good script about, hey, it can be inspection. It can be appraisal. It can be underwriting,
Right.
I've been in the business long enough to know I've had people under contract when underwriting changes midstream.
Yeah.
And you have to go, the rules have changed.
The only way I've found, and it's not a great way, because I used to play a lot of poker, specifically Texas Hold'em.
Were you really good at it?
No.
Same here.
No.
Dead money. That's what they call me.
Yeah. Right. No, not good at all.
Yeah.
But if you happen to have a client that's played before, it's one way that's always made sense to me, where it's like you have, a flop, a turn, and a river.
Right.
And it's like information and things change, and like who is waiting on who, and who has let's say leverage in different parts of the transaction can ebb and flow. And it's kind of like, we're writing an offer. This is all pre-flop, like you get something under contract. Yeah. All right. Now we've seen the flop. We're in the hand with heads up against one other person, the seller or the buyer or whatever. And now there's a new level of negotiation, betting and calling, checking, repairs, raising, whatever. Versa, and then, and it's like, it can change at any point. And like sometimes you in the hand and you're the winner, or like let's say everyone's a winner, you chop it, you each get change money, whatever. Yeah. But that's one analogy that it's made sense to me. And usually I tell it to people and they're like, I've never played poker in my life. And I'm like, cool. I need a different analogy, I guess.
Okay.
Right. Cool. Yeah. I'm glad none of that makes sense to you.
Not any more prepared than you were 2 minutes ago.
Right. Yeah. Man, I had one, I had forgotten about it till you mentioned like an easement. I was helping a guy buy some property on Greer's Ferry, 120 acres on, and it's 4,000 square foot house, up on top of this like cliff, amazing view, incredible, huge piece of property. 117 acres, some change, something like that. And we're trying to get this $12,000 survey done. Like it's because it's on the side of a mountain and like there's time constraints because we're trying to keep this interest rates locked in. Right. It's just this whole thing. I have my real estate license. I do not market myself as a real estate agent. But I was helping this guy. And the guy had built the house, and the 4-car garage, a corner of it's 4 feet over on the neighbor's property. And it's like, dude, you had 120 acres.
And you missed it.
Like, come on. Man. Like, you got to be kidding me.
Yeah.
And we ended up having to negotiate with like the neighbor, buy a tiny sliver of property for them, get it research. I mean, it's just like this whole mess. And, but the reason, props to real estate agents, because the reason I don't market myself as a real estate agent is since I've been on the investment side for so long, the emotional attachment to a house, just like I almost just like don't have it. You know, it's just like I just walk in and it's like I see the matrix. It's all binary. Like,
Yep. There's a slab, walls, roof, gutters.
yeah, you're just walking through like
price,
$400 fix,
yeah.
$3,000 fix, and that's just it's just nickels and dimes.
Yeah.
And that's makes me a terrible agent because you've got a first time home buyer and it's this sweet couple and this house is going to be their
home.
everything.
Memory makers.
It's their forever home. You know, they're 24 and this is their forever home. And I'm just sitting there like, you're moving in 3 years. Like in 7 years, you'll have a 4-year-old and you're going to move closer to their school. And like, you know, but you, like as a real estate agent, you have to be like, oh yes. Like, you know, and they get so obsessed about like the paint color and
they'll call it their house even before they're under contract. Yeah.
Right. Yeah.
I'm calling, you know, my house, our house, your house. Yeah. You know, the one we looked at, you know, Saturday.
The one that the other people own and live in. Right.
That also went under contract Sunday. Oh, what? Yeah.
Yeah.
So,
yeah. Props to, and it's not something I should be excited about, but in a little bit of a way, there's a real estate agent purge happening. And it's kind of a good thing. As bad as I want everybody to have jobs and be happy and provide for their families and whatever, it's like there's just real estate agents have been one of those things where it's like you can't throw a rock without like hitting one. You know, you can't go outside and throw a rock.
And you know, the early 2000s and, you know, late 90s, a lot of people would say the same thing about loan originators. Oh, my brother-in-law used to be a loan originator. Yeah, he's also, you know, working as a plumber too, or, you know, attorney, whatever.
Yeah.
So, but there again, you know, back to the economy piece, you know, that's not uncommon for a lot of you will always have people who see $1 million listing and want to take the exam and live that type of dream as a real estate agent. As you know, very few do. The majority is working really hard all year to try to have 4 transactions. I mean, that's the reality
that's
of
the
it.
math.
Yeah, that's the reality of it. So same way with loan originators, okay? Imagine that you started as a loan originator in the third quarter of 2020 when everybody and their brother and mother wanted to buy a house and rates, you know, went sub 3. Come on, I can be a loan officer.
Yeah.
You know, this is easy.
Right.
But, you know, there's always ebb and flow in life. So here we are.
Yeah. I mean, I don't think anybody makes it in that business as long as you have without developing that mentality of understanding it comes and it goes, and we've got to be ready for all situations.
Yeah.
So,
yeah.
The real estate agent thing, it's worth mentioning because I think people just think it's easy. And I think the loan origination part, people just think it's easy. And maybe at times it is when it's sub 3s and everybody just needs a loan.
Right.
I was at a place where I was trying to do a portfolio refinance when interest rates were low. And like, we ended up doing business with the guy that would call me back.
Right. Yeah.
Like in my mind, and it's a silly in hindsight, but it's like a multiple $1 million like refinance. Somebody should call me back.
Yeah. And I don't remember if it was one of the owners of our company who, ironically enough, I used to listen to his podcasts and tapes and things when I started in the business. It's interesting how things come full circle, but one of the things that he said, or Mike White, or was like, if you want to be a good loan officer, return your phone calls. Like, magic. Yeah, there you go.
It sounds so simple.
Yeah. So, and it is hard to do. You know, I tell people a lot of times, my phone only rings when I'm on it, and I'm always on it, you know, but I also almost always return all of my calls, you know, text or email the same day, you know. So I think when you value your clients that greatly and every new prospective client, you know, whether it's that text or email or Facebook or, you know, Google call, you want to be accessible.
Well, and I was talking so since you were in financial advising before this, and and your career in loan origination, I was talking to a buddy of mine that's a financial advisor. And we somehow got on the topic of it's hard for him to quantify what is the lifetime value of a client. Like in business, you'll typically talk about, and you get into marketing in your business, and it's like cost of acquisition for a customer. And it's an important metric to know. It's a good thing to know, how much does it cost me to get a new client? But some businesses, it may be easy to quantify it for that one transaction.
Right.
But in a market like Central Arkansas, and being someone who cares about people and cares about your clients, it's like you can be there for them long-term, lifetime clients. And so it's like quantifying that's really difficult. And quantifying the loss of one of those when you don't answer your phone or return a phone call, it's hard to know what you're losing out on.
Either I know NMLS keeps these numbers, the mortgage licensing for loan originators, and I know NAR they put out an annual report with a lot of good data on it, and obviously you have the census every 10 years. The numbers have still stayed congruent for the last 20, 30 years, where the average person is going to move 7 times.
Yeah,
and the average loan is held less than 60 months. Okay, so that means they're going to average at least 2 mortgages per house, and those are ballpark numbers just based on census data, NAR data, and NMLS data.
Right.
So you bringing up the value or the cost of a client, I love. There are 2 little stories that I've gained in my life. One, I think. A former mayor had referred this young lady to me, first-time home buyer, early in my career, and I think she was looking like at a $60,000 house. I don't mind telling you, in the back of my mind, I kind of went, oh, only a $60,000 home.
Right.
So that's me being real.
Yeah.
That's me being transparent, going, oh, it's just a $60,000.
Because a transaction takes as much of your time for a $60,000 house as a $1 million house.
Or more in some instances. So I remember keeping that mirror on me because I knew I'd thought that. Fortunately, she bought that house. She became an investor, and she did numerous loans over the past couple of years. And I always remember that, but she started at that, $60,000 loan. And then, I had a closing in March where, I'm a VA mortgage specialist, so we did the first loan that I had done since the 2019 Navy Blue Water Act, where a VA, if he has enough, a veteran, if he has or she has enough entitlement, they don't have to have a down payment.
Yeah.
Okay. So I helped one of my clients finance a $1.4 million home in I think it was Garland County, but he came out of like a 330,000.
So that's on like Hamilton, probably.
Well, it's not even on the lake. He's got some land out between Ouachita and Lake Hamilton.
Awesome.
But his last house we helped him finance was mid $300,000 or $400,000 house. But I remember his very first house, years ago, a decade or more ago, where it was a 135, and that is about as a success story as you can have in your business, where you help this guy finance. He was a veteran, helped finance his first house, then he houses up, and then he starts his business, and he's got multiple successful businesses now, and he closed on his dream house for his wife and his boys, and I mean that's just as good as it gets. But I didn't start by going, oh, just 135,000. You can't think that way. I did with her, but I remembered you don't want to do that. Right. Where can we help develop this client's wealth through real estate?
Yeah. I love that, because that relationship can be so good for everyone involved. Because like my business doesn't run without a good relationship with a lender, and his business doesn't run without good relationships with
they're
people
mutually
like me.
symbiotic.
Right.
Yes,
it's and so I did, to be honest, I carried a bit of a chip on my shoulder for a while, because I was like, man, rates are crazy low. This refinance is going to take a while. I was trying to refinance 60 single family homes in one go, and to get it done pretty quickly. And there's just a lot of moving parts in that.
Yeah.
I just like, it blew my mind that I was just like, I get that to whatever banks, like it's not a lot of money, but like, I'm also at this point, I'm 31. Like, I don't plan on stopping. Like, I plan on growing my business and doing more and more. Like, is there not anybody out there that wants to like help a guy out here? Like, and thankfully somebody did, and it's been great.
Yeah.
I wanted to talk a little bit about family as well. So you have 4 kids.
Only 4.
Only 4.
Only 4.
I only have 3.
Yeah,
So I have a newborn.
Yeah.
I don't know if 4 is in the plans for us, just because
God's plan, not yours.
Right. Exactly. Yeah. I will tell you this. So the day we brought our newborn home, my 4-year-old daughter, we were putting her to bed, and we had the baby in there with us, and she started counting all of us, because I have a 4-year-old girl, a 2-year-old boy, and a newborn girl. She was like, "Daddy, there's 3 girls and only 2 boys. Mommy has to have another baby boy so that there's 3 and 3." Right. And I was like, "We just brought this baby home. Don't be putting ideas in mommy's head." Because now my wife's going to be like, "Well, Emma says we have to have another boy."
Yeah.
I'm like, A, it's not how any of this works.
Right.
You don't just get to pick.
Right.
And B, 3 kids feels like a lot right now.
Yeah.
They're good kids, but man, it's just a lot.
Yep. You'll handle it.
I hope so.
You'll survive.
I hope so.
You'll survive.
Yeah.
It's all about survival those days.
That's what we say. It's like, how'd today go? We survived.
Yeah, there you go.
Everybody's healthy.
Little wins, baby.
Everybody's healthy,
Little
and
wins.
they were happy for parts of the day. That's a pretty good day.
Yeah, little wins. Yep.
So you've got 4, 3 girls and a boy. Awesome.
Yep.
And they're all teenagers?
All teenagers. Yep.
Can any of them drive?
We have Trey Cole, who just graduated high school, and he's been driving.
Okay.
And Anne-Marie will turn 16 on the 21st of August. So I'll have 2 teen drivers. And then since God has a sense of humor, we have 13-year-old twin girls. So I would say that they drive, but I don't think that's legal. So, but one of them has a very good aptitude, and the other one can if she needs to.
Okay.
So.
Man, yeah. Whew.
They're good.
Good.
Yeah. I'll tell you a little funny joke since you mentioned the kids. When the Fed started, adjusting the federal funds rate, which is not mortgage-backed securities, by the way.
Okay.
A lot of people have that misnomer. But obviously they were trying to slow the spending down with rates going up. I had confided in all the kids that interest rates were up, app count was down, and so we weren't having Christmas this year. So it was, last quarter of last year, they're like, "We're not having Christmas this year."
Christmas is canceled.
Yeah.
No.
Thank you, Fed. Thank you, Fed.
Aaron, should I tell my knock-knock joke?
A knock-knock joke?
I have a knock-knock joke, but you have to start it.
Okay. Ooh. Knock-knock.
Who's there?
Robby.
It's just like, it's such a silly joke, but you get such a wide variety of answers when you're just like, all right, knock-knock joke, you have to start it, and they go knock-knock, you go, who's there? And they're just like,
yeah, it's me.
I told it to Aaron, he got mad at me. He was like, I don't know.
Yeah. Having to go through my 4th grade Rolodex of knock-knock jokes.
Yeah, this is not, I did not mean to send us down the trail of knock-knock jokes.
That's all right. I was going to give you a compliment. Is it okay to give you a compliment?
I will try to receive it well.
Okay, so say the name of your podcast again.
Hustle on Purpose.
Hustle on Purpose.
Yeah.
Okay, so if people told you stories about what that means to them.
Oh, I would love for you to share one.
Okay, I'll share mine.
Yeah.
How did you come up with Hustle on Purpose?
Well, I can't take the credit for the name. That was Aaron and a guy named Randy.
Okay.
But we had been talking about creating this YouTube channel and what we wanted to accomplish with it, and what kind of encapsulated the goals for me and my business and my life and the podcast and the YouTube and whatever. And it basically all came down to anything that I have has really just come through pure effort and like determination.
Sure.
Because I'm not exceptionally gifted in really much of anything. But if I am, it's because of my upbringing raised by entrepreneurial parents. I grew up in a business. I was either at school or at work with them pretty much every day.
Right.
And through that has just come the realization that you can get through a lot through pure effort, through just like beating your head against the wall till you break through,
Right.
really. And so it kind of encapsulated that, and like in my older age and with a little bit of success that I've had, finding ways to give back. So I'm heavily involved in my church. I'm heavily involved with Make-A-Wish and just a few other organizations. And none of that's to pat myself on the back, but it's, for me, when they said hustle on purpose, and I let it kind of sink in for a little bit, is just, we actually talked about it today, like how much we really like the name, because it's kind of the dual meaning: hustle like with purpose, hustle on your purpose, hustle with intention. Like all the on purpose just had several different meanings.
Yeah.
That encapsulated what we were trying to do.
I like it. I dig it. I think it's awesome.
Well, thank you. Yeah.
I was watching, I think it was episode 16 with Zeke Tanner.
Yeah.
And so I started thinking about your podcast name, Hustle on Purpose. And since we just came off a joke, one of the things I like, and if your kids hopefully, you know, maybe one day go into athletics, maybe it'll be, you know,
we'll see.
Coach Ikard. And so I was coaching Little League a couple of years ago. And, you always got dads as coaches in the, it may have been 6, 7, or 8, somewhere along in there, Little League. Okay. So it's been a few years. So the shortstop is walking onto the field, in between innings.
Right. And
his dad, AKA coach, AKA dad, says, "Steven, hustle." Steven looked back, kept walking. He's walking out to short. He's playing short.
Man.
Pretty good player. But again, he's 6, 7, or 8.
Little defiance.
So dad's like, "Steven, hustle."
Yeah.
And so Steven stopped, turned around. He started walking to shortstop. And the third time, dad's like on the fence. "Steven, when I say hustle, I mean hustle." And he goes, "Dad, I don't know what that word means."
Oh, that's so funny.
So when I saw your name, that Steven and his dad coaching in Little League, that's what reminded me of that story.
That's exactly how I would probably react in that situation.
Yeah. I don't know what that word means.
I tend to, for whatever reason, like not listening is probably like my biggest pet peeve. And some of it is because
that's why I don't do the watch thing. Yeah.
If I'm telling my children something, it's almost always important for reasons unbeknownst to them.
Yes,
there's something, I'm needing them to do this because I'm busy with this.
Yeah.
And there's some reason there that they're young. They have other things in their head and whatever. Yeah. And so like, that tends to be the thing that gets me riled up. Is the not listening. And about the third time I asked my kid to hustle and they turn around and start walking again, I'm probably climbing the fence. And it's like,
just make sure going forward you have a definition for hustle as it applies to you.
I will try to make sure that I'm yelling at them a word they know. Yeah. It's so funny. Oh my goodness. That's hilarious. The coaching of the teams, I've only ever coached one team. And I was fresh out of college, moved back to Little Rock. And you'll get a kick out of this. You might think it's funny. So in college up at Fayetteville, I was on the Lady Razorback basketball practice team.
There you go.
I loved basketball.
You were
and so,
whipping post is what you were.
yeah. Well, yeah. I won't go into the difference between men and women's athletics, but like first day of practice, there was three guys on the practice team. First day, like first 3 minutes of practice,
Right.
coach pulls us all to the side and is like, all right, I need you to go like 40%. Cause it was like, I could get every rebound and like, it's
Okay.
just a very different game.
Okay.
But anyways,
Yeah.
not to go down that tangent. But so I moved back to Little Rock and wanted to be involved in some way of like giving back. And I was like, I'll coach my church's, I'll sign up to be a coach on the church league basketball team. It'll be great. They call me and they're like, man, so grateful for you signing up. Really excited to have you as a coach this year. First practice will be whatever night, whatever time. You'll be coaching the seniors. And I'm like, oh no. Like I thought I was going to be teaching like 6-year-olds how to dribble, you know, like you're going to give me, you're going to be 18-year-old dudes. Like I'm 22. Like,
what you asked for, you just might get it right.
Right. So, it was fun, but that was the only year I did it. Cause I was like, I feel like I did these kids a total disservice. Like, A, they don't listen to me. I'm their age basically.
Yeah.
And, it was just kind of a mess, but I do look forward to, coaching my kids teams if they're on teams. My daughter's in dance, which I can't dance. So, luckily she's 4, so she doesn't know that I can't dance. She still thinks that I'm cool.
I didn't know anything about, women's gymnastics until I had one that did it for, better part of 13 years. So,
And now you're like, all about it.
I almost figured it out, and then she retired.
Of course.
Yeah.
She's like, Dad's figuring it out. I think I'm just going to give it up.
Yeah, could do something else. Yeah. So,
Dad thinks gymnastics is cool now, so I'm over it.
Yeah.
Is probably some of it. That's
sure.
so funny.
Yep.
And I know you get this question all the time. And like you said before, everyone wants to know who's going to be the next Super Bowl winner.
Sure.
If you had to guess, where would you think, let's just stick to Central Arkansas residential real estate. Where do you think it's headed in the 1 to 2 year time horizon?
Like I mentioned earlier, I mean, I always remain positively optimistic. While, certain builders or realtors say, hey, I'm slow, they're probably still going to be selling houses and probably still be building. The one fact is, whether it was a war or 9/11 or all the things that our country has seen over its great history, people still wanted to own real estate in America.
Yeah.
And people still do.
Yeah.
And people even coming into America. Okay. And that's happening. Arkansas is a, small state in the middle of the United States, but it's not unlike the other states where you have your first-time home buyers. You have people, unfortunately, that may have gone through a divorce, and now one household needs to become 2. Okay, and that creates two new purchases. Just in an office where real estate agent's husband passed away. Well, she may not stay in her 9,000 square foot home because it's just her. Okay, so life's progression and life's ever changing events will continually have people buying and building homes. Will it be the chaos that was 20, 21, 22 COVID? Probably not. But you know what? In another 100 years, there may be something similar. We just don't know.
Yeah.
So, there's always opportunity for people to buy real estate. And as long as we have good agents working with clients at all levels, from buying one at a time as their first to buying a portfolio of 60 as an investment, agents and lenders and title professionals and all the key players, appraisers, are all important spokes in that wheel. And that wheel is going to keep turning, whether rates are 21 or 6 or 3. So I don't see me doing anything outside of the lending world. I don't see myself doing anything, other than continually, providing 100% accurate information 100% of the time when people call me and go, "Hey, Robby, I'm thinking about buying a house. Can we talk numbers?" Sure, let's talk numbers.
Yeah.
So
I love that. I find that as a really inspiring speech right there. Because I agree with it wholeheartedly. I'm in the same boat. Like, people ask me, and I tell them something in the form of, don't judge how I answer this question.
Yeah.
Judge my actions.
Right.
All of my eggs are in one basket.
Yeah.
And it's in Central Arkansas real estate.
Yeah. Yeah.
Have I jumped ship? Absolutely not.
Yeah. Yeah.
Like, I believe in everything that you said, that the wheel's going to keep turning. It just, will it look different? Sure. Should it? Probably.
Yeah.
Like, stuff was crazy.
Yeah.
There's a lot of crazy stuff going on.
Yeah.
Some normalization, I think, is the word you used earlier. And it's like, we're just, it looks like a stark contrast to where we were, but that doesn't mean it's abnormal. It means where we were was like really weird. So I think that's really encouraging.
Yeah.
There's two things that I always ask everybody. So, crazy story.
Okay.
Cause I know you have to have some.
Okay.
Can you share at least one crazy story with us?
Can I be real and tell you that the first one that came to mind wasn't necessarily a crazy story, but when you said crazy story. So, I've been transparent before. We as humans, we tend to profile. Profiling is not always appropriate. I had a real estate agent from Keller Williams that referred this young family to me, and spoke with the wife predominantly, and she was looking at refinancing a modest home, and I don't remember her home being more than $150,000. I don't remember her owing more than 70 or 60. And they had a HVAC issue, and they had financed a new HVAC system and a refrigerator, or maybe a back door. And they figured out that financing it with the retailer at that time wasn't the best move. Rates had moved a little bit, but it was important to them that they paid off that debt. They wanted to do a refinance with the house and the mortgage, just get to one payment and get that payment as low as they could. So, normal process. It's just a cash out refinance. We're paying off, retailer for the fridge, the HVAC, and their new mortgage to one new mortgage with a lower payment. So I show up earlier in my career. I was able to make it to closings, and so I happened to show up at this particular title company. A very modest wife, and then the husband was also there, and she just kept going on about how much, or the husband kept going on about how much he appreciated us helping them with their refinance.
Okay.
And, normal people say thank you.
Right.
And your team did a great job. And, but repeatedly he goes, "Robby," he said, "I want you to know how important this is to my family and me." And you may have to edit this, but he said, "You don't know, do you?" And I said, "What do you mean I don't know?" He goes, "I have terminal brain cancer." And he said, "The doctors have given me less than 6 months to live." And he said, "You reducing we may have reduced their payment $60 or $90 a month."
Yeah.
So it wasn't
just by consolidating.
It wasn't
basically
significant in relative terms, but to this family, it was mission critical.
Wow.
And I said, no, sir. I said, I didn't, your real estate agent that referred you to us for a cash out refinance didn't tell me that you had terminal brain cancer. And so I remember that story because I was doing what I normally do as my vocation, as my occupation, but it carried so much more weight to that family. Adjusting their payment $90 a month.
Right.
So I don't know if that's a crazy story, but
It's a good one.
That's a story I remember.
Yeah.
So.
Yeah, no matter what your job is, it's hard to remember sometimes the impact that you can have. But the fact that you're able to do something like put people in their first home, refinance and change their payments.
Yeah.
You know better than I do. It's like people's largest investment is almost always their home.
Yep.
And I think that gets kind of lost in the busyness of it all. Real estate agents, crazy busy.
Yep.
Loan originators,
Transactional.
crazy busy. Yeah. And it's like they're, even if you are a person that truly cares about people, it is just, it's part of the nature of the transactional business. Like you said, it's just like, they all have to be taken care of. They all have to get moved through, and so they can go on with your life and you can go on with theirs. So it's cool to hear stories like that where I'm sure it's a bit of a grounding experience and brings you back as like, oh yeah, like these are people, these are really important things in their life, and you're able to be a part of that. It's really cool.
Right.
Yeah. So in my business, it's like rent houses. It's so easy for it just to, especially just the way I'm wired. It's just another house, just another stack of 2x4s arranged in a way where somebody can live there and pay me rent every month.
Right.
There's been some things that help ground me in remembering the fact that like, oh yeah, when I'm renovating this house, it's likely for a family to go live there. Yeah. Somebody's raising their kids there. Yep. Somebody's eating, sleeping, breathing in there. Yeah, like every day.
Yeah.
So really trying to focus on making sure those residents are taken care of. And like I spend more on maintenance than I should because I don't want people living in a place where stuff's not fixed.
Right.
And
fixed right.
Right. Like I want...
You can fix it or you can fix it right.
Right. Yeah. But man, yeah, thank you for sharing. That's a really cool story.
Sure.
Any other ones?
What was your other question?
Oh, the other one is, so if you could go back, let's say go back to right before, so 18 years ago, you're about to get into the loan origination business and you could give yourself one piece of advice. What would it be?
Probably early on, it's okay to go home at 5 o'clock. You know, your sink is not going, or your ship is not going to sink if you work that extra 6, to 7 to, early in my career, my work-life balance almost sank me, like physically, emotionally, spiritually, and that my wife is, I call her Saint Catherine. She can sense when things are bothering me and almost always go, you're concerned about this, or this is weighing on you. And I put, like any young and eager employee, that you want to show your best, and you want to prime and get the pump primed, and I don't know if it's Zig Ziglar talks about when you start a business, getting that boulder moving takes an exorbitant amount of energy to get that thing moving, and then it gets easier along the way. But early on in my career, I didn't carry that work-life balance as good as I should have. And fortunately, I had to grow into that. And that's, until you've done that, and you can see what effects it can have on not only you, but your family as well. There again, knowledge. When things are up or down, you're always learning, right? And so just to understand that, yes, hard work is going to pay off, but you don't have to work 60 hours a week to do it. And God's going to provide what you need to survive. And fortunately, I give you kind of a tangent off of that answer. Maybe I've gone down a rabbit hole, but during COVID, I happened to be neighbors with a couple of loan originators that work at other banks, and they've been in business longer than I have. And I happened to stop by one. He's out in the yard. It's later in the evening, and typical scenario, getting out of the truck, got the briefcase / man bag, whatever you want to call it, and he's just disheveled. And I'm like, what's up? He goes, man, he said, I'm not keeping up. I mean, this guy's been in it over 20 years. He goes, man, I'm in at 7. And I said, I'm not getting home till 7 or 8. And I said, you know what? I said, I'm not doing that. I said, I could probably make more loans, make more money. But that work-life balance is critical, not only to you, but those around you. And so I told him, I said, man, when it gets 5:30, I'm done. I got to give. And the younger my kids were, I used to call it giving my kids my eyes. When I came home, put the phone up, or come home, I put the phone up on the china cabinet. Yep. And Dad gives you, not, now that they're teenagers, they don't want it. They're in a screen, but
screenagers.
Screenagers. Yep. But that, if I would have looked back to answer your question and told myself something earlier in my career, it would have, hey, you'll be okay. You ain't got to work 60 to 70 hours a week, and you'll be okay.
I think it's such a common thing. I'm sure it's with young women as well. I just hear it more from men. And I've been through it from the male perspective, but that younger ambition and trying to balance it all is so hard. It's still hard now, but I think the only thing I should call my wife Saint Anna, because she is more patient with me than I deserve.
Yeah, same here. Yeah.
But a lot of it, I think the only thing that saved our marriage in some of those earlier years was communication and me communicating to her that I feel like I have to work like this right now so that I don't have to work like this forever.
Sure.
And thankfully she believed in that. Right. And thankfully, at least up until this point, it has worked out like that. Yeah. But there was years where it was like, I was working.
Yeah.
I mean,
both ends.
Like if she,
and here, you're the teeter-totter analogy visual. If you are, balance, that work-life balance is, and I think one of your previous guests talked about that work-life balance. And balance is a subjective term. It means different things to different people. Right. Work hard now, play harder later, and that, that may be the plan that worked for you and your wife and your family, and everybody's subjective is different, and everybody's balance is different. Everybody's hustle is different,
Yeah, there it is, the hustle. It's hard to know it's hard to know how much of your success and longevity in the business is because of those like years where you were, and you had to, so it's like, God's plan is just so interesting. It's like some of it you have to go through that to learn it. Yep. It's like, even if you were able to go back and give yourself that advice, you'd be like, like that's a loser mentality. Like I'm working.
I gotta go.
Right.
Yeah. I gotta go.
Yeah, exactly. Yeah. So it's the older my faith has grown so much stronger as I get older. And so much of it is because I've been able to see the reason for so much of the stuff that I've gone through before. Yeah. Some of those things that made me ask why. Yeah. Now that I've lived a little bit more, I'm like, oh, okay, I see why now. Yeah. And it makes it easier when I'm asking why about something happening now. Yeah. It makes it easier for me to have that faith of, well, because of something I don't understand.
It's called perspective. When you start down here and it's just faith, and you don't have any proof, the longer you live, the more we have proof. Yeah. And they call that perspective.
Yeah. Man, this was so good. It's been a real pleasure to get to talk to you and get to know you. And
well, like I told you before, you do this really well, and you make it really easy, and keep up the good work.
Yeah, thank you so much. Well, I'll undoubtedly be talking to you more in the future. I've got some things I need to talk to you about, real estate wise. Some people that I think I need to give them your number.
Sure.
Always happy to. A big part of what we're trying to do is just promote small business in general, and especially local businesses. Yeah. If we can spread the word, help people out, we want to do that. So Thank you again so much for coming. This was great. Thank you all for listening and for watching. If you're on Spotify, go check out the video on YouTube. If you're on YouTube, you can listen to us on Spotify. Go reach out to Robby Cole at Benchmark Home Loans, Benchmark Home Loans. Yep. And he'll get you set up. Real estate's still moving, even with interest rates high, stuff's still moving. The wheel keeps turning, as you said. So go check him out. And we look forward to seeing you next time at Hustle on Purpose.